Joining us now is Sony Pictures CEO Ravi Ahuja, along with CNBC's Julia Borston. Julia.
Thanks so much. And Ravi, thanks so much for joining us here. An exclusive interview and your first interview since you became CEO of Sony Pictures Entertainment in January of 2025. Perfect time to sit down and be talking about your strategy for the studio, Spider-Man Brand New Day, breaking all of those records. What does the success of that film say about Sony's strategy right now?
Yeah, so obviously the film's done incredibly well, as you just heard, right? It's #1 in so many different markets around the world. It's done incredibly well in the U.S. It's a fantastic movie, which is really our #1 job, is to make, market, and distribute outstanding product. Our strategy over the years, I would characterize as growth through differentiation. Right? We're a lot like most movie studios, but we approach our business a little bit differently in each area. So in film, we've been decidedly theatrical, dedicated to theatrical at a time when not everyone was. I think everyone's coming back around to that. But we've been that way throughout. In television, we sell to a lot of different partners. We don't have a general entertainment streaming service like many others do, and we sell to many different partners. Those things work incredibly well. Over the last year or so, we've had 25 film or TV shows hit #1 on their respective platforms, 9 different streaming services or networks. So, we work with many different people and our content is popular. In streaming, we have anime, right, Crunchyroll, and then we're working in many other areas like location-based entertainment.
So before we get into the streaming strategy, which is quite different than your rivals, back to the theatrical business. Yeah. There's a lot of hope that the theatrical business is doing better. You have your film, you also have The Odyssey, breaking all sorts of records, but there's still a lot of concern about weakness at the box office, which has not returned to 2019 levels. Is the success you've had with this film replicable? And what are you doing to get the studio to be able to keep churning out that type of hit?
Yeah, I think it is replicable. I'm very encouraged by what we've seen this year. It's success in many different kinds of films. So obviously Spider-Man is franchise IP, but there's been success with Obsession, with Backrooms, The Odyssey, original storytelling as well. The most encouraging thing is young audiences are coming out.
Yeah, and so you have a distribution deal with Netflix rather than having your own streamer. You mentioned Crunchyroll, which is more niche, but why does it make sense to take a totally different strategy than all the other media companies which have their own streamers and instead license your content?
Yeah, our focus has been over the last 9 or 10 years to not have a general entertainment streaming service because we think everyone does that really well. There are a lot of them in the United States. It's done incredibly well, so we view it as a much better strategy is to partner with others. Since we've done that, we've had double-digit bottom line growth. As I mentioned before, our movies and TV shows do incredibly well. So the strategy's working, and we don't see a need to change it. We think it works well.
So right now is such a weird period of change for the media industry in that we're waiting a lot to happen. We're waiting the Paramount, Skydance, Warner Brothers Discovery deal, also awaiting the NBC Universal spinoff from Comcast. Where do you fit into all of this? Are you a buyer or seller, and what types of assets are you looking at?
Well, for one, I think we could say that almost all of the time. It always seems like there's some deal in our business that's being worked on in some way. That's either awaiting approval, waiting close, just having closed. So I think that's normal, right? I think where we are is just how things are. Our strategy fits in very well with that because all of these folks are our partners. In terms of whether we would buy or sell, I don't think we're a seller. We have been a buyer, but we are typically a buyer of a particular focused capability, like Crunchyroll for us 5 years ago, or IP. We bought a larger stake in Peanuts Worldwide, which is Snoopy, right, earlier this year, so now we own 80% of it.
Are there any assets you're looking at right now?
There's always assets we're looking at, but it always falls into that. It falls into bolt-on M&A, IP, or capability. So we're not as interested in mega mergers.
And you're not going to give me any names, which I understand. But if the Paramount and Warner Brothers deal goes through, consolidating 2 potential buyers, would that be bad for you because you're removing one of the buyers from the market?
Yeah, as a seller, you never want less buyers, but probably the most important thing for us is how healthy they are. So when the 2 come together, if they come together and they're healthier, that's a good thing for us.
So you support the deal?
I don't have a rooting interest in the deal, to tell you the truth, but if it happens, I think they can be very successful.
If the deal is blocked by the state AGs, do you think that would have a chilling effect on deal making?
Not sure. I mean, potentially. It could mean that people find it harder to get deals approved. So potentially.
You've made a number of investments in the theatrical business. You bought Alamo Drafthouse, some other assets as well. What is your strategy there? Again, different from the theme park business, but still in terms of real life experience.
Again, differentiated, right? So that's what we look for. Alamo is a very different type of experience. It's dine-in. It's for film fans. So there's no advertising, for example. And there's a pre-roll that's very focused on the film that's made for each individual film. So we think that's a very specific, unique, differentiated experience. And doing very well this year, by the way. We just entered into a lease to take over the Cinerama Dome here in Los Angeles. It's been closed for 6 years. Again, unique experience. Cosm, we invested in about a month or two ago. We're a minority investor in Cosm. We're going to do a lot of things commercially. It's a unique experience for people who've seen it. It's immersive, shared reality, sports and movies. So we're also excited about that.